Hello and welcome to Insurance Mantra, your weekly guide to the world of insurance, only on ET Now. In today's Leadership Insight segment, we turn our focus to the reinsurance industry, the backbone of every insurance market, shaping pricing, capacity, stability across life, health and general insurance. We look at the key trends, rising climate risk, evolving IRDA guidelines, global pricing cycles, FDI reforms, and how India's expanding insurance economy is driving reinsurance demand. To take us through these developments, I am joined by a very special guest, Interim CMD of GIC Re, Hitesh Joshi. Welcome, sir, to Insurance Mantra. Thank you for joining our show, coming to our studio, sir.
Thank you so very much.
To begin with, what's your views on current phase of reinsurance cycle domestically and globally also?
To start with, I would like to give a bit of a context because last 10 years have been a remarkable decade for the reinsurance industry globally. 2017 was the year where the global risk carrier industry bore tremendous amount of natural catastrophe losses. It was a record year in more ways than one. That was again followed by another year of 2018, which saw a lot of catastrophe activities. These 2 years departed from the long-term average and changed the perspective of the reinsurance industry and many underwriters. These resulted into 2023, the reinsurance market seeing a hardening which was not seen in a previous couple of decades. So coming from there, 2023, very significant hardening in terms of pricing, the coverage, and the risk distribution between insurance players and reinsurance players. There is a softening cycle for 24, 25, and something similar is expected for 2026 January renewal as well. But coming as we do from the very high pricing level of 2023, we can expect the market to continue to soften, but still there is a good amount of price adequacy for 2026, and it presents a very interesting dynamic in terms of very good ample capacity. So we can expect that the renewal will be smooth, and it should be a very smooth renewal for the insurance buyers.
Okay, 2026.
2026 January.
Okay, so just few more time, sir. Sir, where does Indian reinsurance market stand in terms of competitiveness and development going ahead?
Since reinsurance markets tend to be global in character, the Indian reinsurance market will tend to mirror the trends of the global reinsurance market with a bit of a tweak for the regional character and the country-specific factors. So the same softening that we would expect for the global reinsurance market could be mirrored in India. Apart from that, to the extent there is a heightened, there is a greater participation of the foreign reinsurers in India with a specific focus, we can expect a bit more pressure on pricing. There are already quite a few foreign reinsurance branches in India which have set up shop since 2017. Also, new players are coming into the gift city during last 1 year or so, and it is we can say it is in the process of becoming a reinsurance hub. This is also because they are seeing the tremendous growth potential in the Indian market.
Okay, so what kind of competitiveness you have seen in last few years for your company?
I think it is a fairly stable competitive scenario as far as we are concerned. We have been able to maintain our market share. To the extent there is some reduction in our market share, it is due to the conscious steps that we have taken towards pricing discipline, underwriting discipline. We had this issue around credit rating. That is why we were working very hard on our underwriting performance. So whatever is the market share, I think I would say that it is a deliberate choice. It is a conscious strategy that we have adopted during last 4 to 5 years, and that really bore fruit in our getting our credit rating back to A- in October 24.
Okay, okay, sir. So you had certain decisions are taken deliberately.
Yes.
Yes. And sir, how do you see that you just said that after 2016, few players came in India. So reinsurance market completely evolved in India and globally also.
I think it is a steady evolution. Actually, since it is a global in character, whether the reinsurers participated in Indian market from their headquarters or their regional office or through their branch in India, ultimately the competitive dynamics is not so very materially changing unless that particular, say, business unit has a very different kind of focus and a different kind of business plans.
Okay.
So the competitive scenario for GIC is essentially what it was. It can gradually evolve.
Okay, it will gradually evolve, sir. But for 2026, what will be the priorities of GIC going ahead for 2026 and substantial years?
In terms of the domestic market, we would like to say that whatever is the growth in the direct market, it will get reflected in a reinsurance market in India. And it will be our endeavor to continue to maintain our market share. We believe that should be fairly possible, and we'll continue to focus on that.
Focus on globally or domestic market?
Domestic market.
Okay.
We'll continue to maintain our market share in the domestic market, despite, say, new players coming into the GIFT City, maybe another private player being licensed. Apart from that, as I mentioned, that October 24 is when we got our A- rating back, which is quite important for writing international business. Unfortunately, it came so close to the January 25 renewal that we could not really leverage that. But we hope to be able to leverage it very material for January 26 renewal. We hope to resurrect and revive our relationships with our international clients in a very major way. So our focus going forward in a short to medium term is to grow our international business on the back of this rating.
Okay, international business, any target you are looking at for the international business?
We have not set any target, but whatever relationships we had, particularly in, say, rating sensitive countries, and then so we would like to again regain the business that we lost because of our rating downgrade to B++ in 2020.
Mm-hmm. Okay. Sir, one major change is happening. The new types of risk are evolving in the insurance sector. One of them is climate risk. So how you are looking at the climate risk, and how you will reinsurer company and a market leader like GIC Re is seeing the climate risk, the changing climate risk?
We are basically relooking at the entire climate risk in our portfolio. We are recalibrating our models. We have to have a bigger margin of safety because of the behavior of the climate, which is deviating from the model. So there are chances of a greater model error. Modeling is catching up with the emerging climate change scenario. So essentially, we need to focus on diversification as a major strategy, apart from the recalibration of the modeling and building better margin of safety in how we price the risks.
And are you ready to capitalize these market developments?
Yes, very much. I would like to emphasize here that on the back of the underwriting discipline which we embraced during these 4 years, and the revamping of our operations, our risk appetite, and the way we have started looking at the business, along with our improvement in solvency to 380%, we are in a very healthy position to exploit any emerging opportunities, particularly in the context of emerging IFRS and RBC regime, which are just around the corner.
Okay, sir. Now, sir, I will move to our rapid fire segment. So I'll ask you a few questions and you have to answer in a rapid fire way. So here we go. Rapid fire for Mr. Hitesh Joshi. One word to describe India's reinsurance market today.
Very dynamic.
Biggest risk for reinsurers in 2026, NatCat, cyber or pricing pressure?
NatCat.
Is India adequately priced for NatCat risk? Yes or no?
No.
One global market GIC Re expect fastest growth from?
USA.
USA. Will reinsurance rate harden further next year?
No.
A line of business you believe is under penetrated in India?
Home insurance.
Cyber insurance, the next big opportunity for reinsurers?
Yes.
One IRDA reform that will most benefit reinsurers?
Principle-based regulation.
What worries you more, capital adequacy or catastrophic exposure?
Catastrophic exposure.
One thing Indian insurer must improve before the next renewal season.
Maybe the quality of the info pack.
Okay. Which segment will grow faster for GIC Re, domestic or international?
International.
Is alternative capital a threat or opportunity for reinsurers?
Actually, it is both. Those who tap it, it is an opportunity. Those who don't tap it, it is a threat.
One product line you want Indian insurer to innovate aggressively.
I would say maybe health.
Biggest misconception about reinsurance in India.
I think that reinsurers made a lot of money, particularly going back a couple of years in agri segment.
Okay. One advice you give every insurer before signing treaties.
Let us keep the long-term relationship in mind.
Okay, let us keep the long-term relationship in mind. So my final comment from you, what will be your insurance mantra to our viewers, to insurance companies and to public at large?
I think at the end of the day, ultimately, insurance is a legal product. We need to be far more careful when we are dealing with policy wording. Everybody should read the policy. So that should help them avoid surprises, which may not be always pleasant.
Okay, thank you so much, Mr. Joshi, for joining our Insurance Mantra show. So time for a short break now. After the break, for our Expert Speak segment, we'll be joined by Madhulika Bhaskar, retired GM and Director of GIC Re. Stay tuned.